Warren Buffett just made the most shocking announcement in Wall Street history, and it sent his own stock crashing 6% in a single day, wiping out billions of dollars. The 94-year-old billionaire, the man who's been called the greatest investor of all time, just announced on May 3, 2025, that he's stepping down as CEO of Berkshire Hathaway after 60 years. But here's the thing that's got everyone spooked. His company just hit all-time highs. He's sitting on hundreds of billions in cash, and he keeps saying everything is fine. So why is he leaving now? Does Warren Buffett know something that we don't? Is he trying to warn us about what's coming? Or did something deeply personal just happen that changes everything? Stay with me because what I'm about to reveal will shock you, and it might change how you think about money, aging, and what happens when even legends have to face reality. Let me tell you who Warren Buffett really is, because this isn't just any billionaire stepping down. Warren Buffett is the guy from Nebraska. They call him the Oracle of Omaha, who took a struggling textile company called Berkshire Hathaway and turned it into a $1.2 trillion empire over 60 years. Here's how successful this has been. If you had invested $1,000 with Buffett in 1965, you'd have over $50 million today. And despite being worth over $140 billion, he still lives in the same house he bought in 1958 for $31,500. He drives himself to work, drinks Coca-Cola for breakfast, and eats McDonald's regularly. This is definitely not your typical billionaire lifestyle. So, it's May 3rd, 2025, and thousands of investors have flown to Omaha for what they call the meeting was wrapping up around 1 p.m. when Buffett mentioned getting a 5-minute warning. Most people assumed the event was ending normally. Then Buffett said something interesting. I want to spring that on the directors. What he meant was that even his own board of directors didn't know what he was about to announce. Greg doesn't know anything about this that I'm telling you right now, he said, referring to his successor. Then he made the announcement. After 60 years, he was stepping down as CEO. The crowd gave him a standing ovation. This was the man many thought would run Berkshire forever, and he chose the final moments of the meeting to make this major announcement completely unscripted. Now here's where this story gets really emotional. In interviews after the announcement, the 94-year-old legend admitted something that stunned everyone who knows him. For the first time in his life, he's actually feeling old. I didn't really start getting old for some strange reason until I was about 90. But when you start getting old, it becomes irreversible, Buffett told the Wall Street Journal. Think about that. This is a man who has defied aging for decades, who's been sharper at 90 than most people are at 50, and he's admitting that time finally caught up with him. He shared specific examples. Losing his balance sometimes, forgetting names, and having trouble reading newspapers as clearly as before. For someone who's been incredibly sharp well into his 90s, these changes were noticeable. Buffett said the difference in energy level between him and his successor Greg Abel became more and more obvious. He could see that in a 10-hour workday, Abel could accomplish much more than he could. And then Buffett said something that shows you exactly why he's been so successful. It would be unfair not to give Abel the position. The more years he spends in charge, the better for Berkshire. Even at 94, even when stepping down from his life's work, Buffett is thinking about what's best for the company, not what's best for his ego. So who is this Greg Abel guy that Buffett trusts with his trillion-dollar company? Greg Abel is probably the opposite of what you'd expect from a future billionaire CEO. He's 62 years old from Edmonton, Canada, and as a kid, he delivered advertising flyers door to door and cleaned discarded bottles for cash just to make money for school. Greg isn't some Harvard MBA hotshot. He got an accounting degree from the University of Alberta and started at PricewaterhouseCoopers as a regular accountant. Here's how he ended up at Berkshire. Abel joined an energy company called Cal Energy in 1992. When Berkshire acquired that company in 1999, Abel came with the deal. Buffett has been watching him work for over 25 years. For the past 7 years, Abel has been Berkshire's vice chairman, running everything except insurance. We're talking about railroads, utilities, manufacturing companies, hundreds of billions in assets. And Buffett has been watching him outperform expectations every single day. Buffett's assessment of Abel is clear. He just was so much more effective at getting things done, making changes in management where they were needed, helping people that needed help. Coming from Buffett, that's high praise and shows this decision is based on performance, not just succession planning. Now here's where things get crazy. The moment Buffett made his announcement, Wall Street had a complete meltdown. Berkshire's stock dropped 6.2% in one day. The Class A shares fell from their all-time high of $809,350 down to around $760,000. That's almost $50,000 per share lost in a single trading session. But why? Everyone knew Abel was going to take over eventually. Buffett had announced him as his successor back in 2021. So why did investors panic? Here's the thing that's really spooky. Berkshire had been absolutely doing really well. The stock was up massively while the overall market was struggling. Everything was going perfect. So when Buffett suddenly said, "I'm out," investors started thinking, wait, what does he know that we don't? It's like when the captain of a ship suddenly jumps into a lifeboat. Even if he says it's for good reasons, you start wondering if the ship is about to hit an iceberg. One analyst called it a shocker. Portfolio managers were trying to calm investors, saying things like, Warren will remain involved as chairman. But the damage was done. The market was spooked. But here's what's really interesting about the market reaction. Smart institutional investors, the big money managers who know what they're doing, they weren't panicking. Jack Ablin from Crescent Capital said he's not alarmed and wouldn't sell Berkshire stock. Art Hogan from B. Riley pointed out that Buffett built such a strong team that Abel has tons of resources to work with. So we've got two reactions: regular investors panicking and the smart money staying calm. Why the difference? But there's definitely what you could call a Buffett premium built into the stock price. For decades, people weren't just buying Berkshire, they were buying access to Warren Buffett's decision-making and market insights. Without Buffett as the active CEO, some investors worry that premium might decrease. It's understandable. When you've relied on someone's judgment for 60 years, their stepping back creates uncertainty. The conspiracy theory that's got everyone talking, 12 to 14. But here's where things get really interesting. Because whenever Warren Buffett makes a big move, people immediately ask, does he know something we don't? And honestly, I get why people think this. This is the guy who's been right about almost everything for 60 years. He avoided the dot-com crash. He predicted the 2008 financial crisis. He's made money in every market condition you can imagine. So when he suddenly decides to step down right when his company is hitting all-time highs, people start connecting dots that might not even be there. Look at the timing. We've got record market valuations, inflation concerns, massive government debt, and geopolitical tensions everywhere. Berkshire is sitting on hundreds of billions in cash, and now Buffett is stepping aside. Some people are saying this is Buffett's way of sending us a message. I'm getting out before something big happens. Think about it. Why would the world's greatest investor step down right when everything looks perfect? Why accumulate the biggest cash pile in company history? Why choose this exact moment to hand over control? The conspiracy theorists are saying Buffett has lived through every major market crash since the 1960s. He knows what the warning signs look like. And maybe, just maybe, he's seeing those same signs now and getting out while he can. Before you start moving all your money into gold bars, let's look at the other side of this story. First, Buffett himself addressed these concerns at the meeting. When people asked about economic worries, he basically said, relax. He said past financial crises were really nothing in the long run and told investors to stay patient. He also explained that massive cash pile everyone's worried about. It's not because he's scared of a crash, it's because he literally cannot find good investments at current prices. I just don't see sensible opportunities at these prices, he said. This is classic Buffett behavior that we've seen for decades. When stocks are expensive, he holds cash. When they're cheap, he buys everything in sight. It's not panic, it's discipline. Second, this succession plan has been in the works for years. Abel has been groomed for this job since 2018. The board voted on this transition months ago. This isn't a sudden escape plan. This is careful, methodical planning. Third, and this is huge, Buffett isn't actually leaving. He's staying on as chairman of the board. He'll still be involved in major decisions. He'll still mentor Abel. What do you think? Is Warren Buffett's retirement just a smart old man making a wise decision? Or is he trying to tell us something about what's coming next? Drop your thoughts in the comments below.